Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. The housing market comes out of its summer hibernation after the public holiday this week, and it appears the downturn in prices is losing momentum. Well, maybe I'm just hopeful on that one. Domain's quarterly house price report, which is out today, shows an easing pace of quarterly decline in Sydney, Brisbane and Canberra, and prices stabilising in Melbourne, Adelaide and Hobart. So what's it mean for the coming months? Dr. Nicola Powell is the Chief of Research and Economics at Domain. Nicola, welcome back to Fear and Greed for 2023.
Thank you for having me on again. Yes, 2023. It's
incredible.
Yeah, it is incredible. Where did 2022 go?
Exactly. So before we leave 2022, take me through some of the stats from the December quarter. The decline has definitely slowed in some states.
That is true. I think it was a really clear narrative when we were looking at the time series across our various capital cities and across the combined capital cities. And each city tells a slight different story, but the big takeaway was Australia's housing market downturn did lose momentum over the December quarter. But I also think it's important to put it into perspective compared to what we had been seeing. Because if we go back to the September quarter, what we saw in terms of house prices, we saw a significant rate of decline in the 3 months to September. So in Sydney, Melbourne, Brisbane, Canberra, Hobart, and across the combined capitals, we saw house prices make the steepest quarterly fall ever to be recorded across all of those capital cities. So we are still seeing some capital cities see house price falls over the December quarter. But I think what this shows is we're moving away from that peak rate of quarterly decline that I really think was felt in the September quarter.
I'm just interested. Lots of different market economists think that house prices still have a long way to go. Interest rates, even if they don't go much higher, the full impact hasn't hit people with mortgages yet, I think. How do you think the next kind of couple of quarters will go?
So I think we're still expecting property prices to continue to fall. I think it was a pretty unusual spring selling season for the housing market because one of the aspects that's really helped to place a floor under property prices over the December quarter was really a lack of new supply coming onto the market. When you have a look at new listings nationally, in regional markets and also across the combined capitals, we really didn't see that seasonal bounce in new listings going from August to September. And actually over the spring selling season and into early summer, listings overall, the flow of new listings has been unseasonably weak for this time of year. And what that means is we're not seeing a dramatic build-up of total supply on the market. At a national level, total supply is down 3% over the past year. And when you compare it to that 5-year average, it's about 23% lower at the end of December compared to that 5-year average. And it's the same trends really across the combined capitals and into regional Australia. So it's been a really unusual period of time where I think we've seen prospective sellers sit and wait to see how far property prices fall, whether we continue to see them fall at the fast rate that we had been seeing over the September quarter. And I think that in itself, we've seen obviously a pullback in buyer demand, so the number of sales as well. But I think the fact that we've seen sellers go to the sidelines a little bit has really helped to provide that floor for property prices so far.
But presumably those sellers will come into the market at some point, won't they? And that won't help property prices, well, not if you're trying to sell.
And this is one of the unknowns because those delayed decisions could come to the market in autumn or they could come later in the year in the spring selling season of 2023. And I think what happens to those delayed decisions and when the level of new listings, if they do make a significant increase, that's obviously going to impact the total level of supply on the market. So I think that along with strong levels of inflation and, we're expecting interest rates to continue to rise, there are many things that could weigh in on our housing market, and we're still expecting property prices to fall. But I think what we've seen is such a significant decline over September quarter, and that momentum has been lost over December. But, as I said, we are expecting property prices to continue to decline at least in the first half of this year.
Okay, if we bring context to this, if you look at a 10, 20, 30-year chart, are Australia's property prices for homes and for apartments, Obviously they've fallen in the last 12 months, but is the trend, the long-term trend, is still up?
Yes, it really is. And I think we've done some analysis around property price cycles, and we looked at across combined capitals, and we picked out some of the cities as well. And we had a look at the steepness and the duration of an upswing, and then the preceding downturn that unraveled afterwards. And what we found is the downturns tend to be shorter and less severe than the upswing that preceded. So it is unlikely, based on that kind of historical lens, that it's unlikely that we will see property prices pull back to where they were prior to the pandemic upswing. I think, house prices are very different to unit prices because the upswing of the pandemic was really concentrated in house prices. And, we saw two of our capital cities, that was Canberra and Hobart, see just over a 50% increase in house prices during the pandemic, and a phenomenal rate of growth. And, many of our other capital cities, we've got Sydney, it saw a 40% increase. When you have a look at the downturn to date, house prices in Sydney have seen the deepest fall. They're about just over 11% behind or below the price peak that was in March of 2022. So, 11% is a big decline. This is well into the downturn for Sydney. Sydney is certainly leading the price cycle, and some of the other capital cities have also seen a significant decline. Canberra is up there at almost 7% from its peak, or 6.7%, and Brisbane as well, 6.6%.
Stay with me, Nicola. We'll be back in a minute. My guest this morning is Dr. Nicola Powell, Chief of Research and Economics at Domain. Okay, I just want to ask you about a few things that we've got coming up this year which could affect property prices. The first one, fixed rate mortgages, people rolling off those. Now, there seems to be, I'm only reading the media, and of course you can always trust the media, Nicola Powell from Domain, but it seems like a bunch will be rolling off fixed rate mortgages this year, going on to variable rate mortgages, and they'll really notice that.
Absolutely. And I think that's why, it's so hard to have that crystal ball and have that accurate prediction of what's going to happen to the property market, because there's no single factor that drives our housing market cycles. There are many factors that influence. Interest rates are one of those, but there are many others, such as population growth, demographic changes. We saw that impact during the pandemic. And I think, the fiscal cliff is obviously one of those things to watch for this year, because we are going to see many mortgage holders roll off of those rock bottom interest rates that were locked in 2021. And that is a risk, one of the risks for the housing market. I'm probably more in the positive camp for this fiscal cliff that's coming. I think, banks don't want mortgage holders to default on their mortgage repayments. And I think banks will be already prepping and having those conversations with their clients that are due to see their fixed rates expire this year. And while it is a risk, I think to have a dramatic impact on property prices, we need to see a broad-based increase in distressed listings. And we're not seeing it today. It's something that we are going to be tracking intensely this year to see if we do see those distressed listings increase. But so far, and I remain optimistic about distressed listings this year and that fiscal cliff. It is obviously a risk, but as I said, we would have to see a dramatic increase in a broader scale level of distressed listings across the market.
Okay, what about investor demand and then how that flows through to rents? It just seems that rents are extremely high at the moment, and if I'm an investor and can afford it, it seems like not a bad option. How do you think that'll play out over the next 12 months?
And this is one of the positive drivers for increasing property prices, particularly for unit prices, because as you said, the rental market is extraordinarily tight. It's a landlord's market across Australia, all of our cities, into the regional markets. We've got house and unit rents are at record highs across the combined capitals, and every single capital city has a record high house and unit price, apart from Darwin and units in Perth. So this isn't just a single area in Australia that's in a landlord's market and seeing record rents. This is largely Australia-wide. We've seen the longest stretch of continuous rental growth in the history of our time series. So house rents have risen now for 7 quarters in a row, and unit rents have risen for 6 quarters in a row. So it is tight, it is competitive, and I think we have seen extreme competition between tenants. And I think for investors, that is a carrot to come into the property market. And I think, that is one of the factors that could help support property prices, and particularly unit prices, more so than house prices moving forward. And I think the other positive part for investors is we've got gross yields now improving as well, because we've got high rents and we've got softening property prices. So, the outlook for an investor, when you look at that tight rental market and those improved yields, I think, those that aren't fazed by purchasing a property in a downturn, I think will be actively looking now.
Do you think, Nicola, that given rents are so high, it is something the government should step into and intervene in the market? I say that as an economist, and I don't believe they should. So it's hard for me to even ask that question.
Yeah.
But there are people who are really struggling to pay rent, and that is a societal problem that we have to worry about. Might be great for investors, but there are people struggling just to keep a something over their head.
Yeah, I mean, there's two sides of the coin. Obviously, there are people out there that are really struggling to pay and meet their rental obligations. But then on the flip side of that, you've got investors facing higher costs of holding a mortgage. When you have a look at the cumulative increase that a mortgage holder will be facing, if you've got $1 million mortgage, that's been an increase of $1,800 a month. So I think, there's additional costs being faced on both sides, from the investment side, but also, going back to your original question of should governments intervene, I think there are certain areas where the government should intervene in the rental market. And I think, it's things like social housing. We haven't built enough social housing to house our most vulnerable Australians. So what that means is we've got many vulnerable Australians in the private rental market, and that places additional demand. They're then facing record high rents. And I think that is one of the things where government can really help to provide more social housing in the right areas, and maybe other things like additional rental assistance provided for low income households, because the rental market dynamics have changed so dramatically. And I think we need more investment activity, because we need change in the rental market. It's such a tight environment for a tenant. It's in some areas it is literally like trying to find a needle in a haystack when you're trying to secure a new lease. But it's other things like build to rent as well, helping to advance the build to rent sector, because build to rent is something that is much more advanced in other countries like the UK. And, there's no one thing that can alleviate pressure in the rental market. I think it needs to be a combination.
Nicola, thank you for talking to Fear and Greed.
Thank you.
That was Dr. Nicola Powell, Chief of Research and Economics at Domain. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.